What's going on YouTube? It's your boy CarlFx. Welcome to my Agile series. So this series is called Agile. What does Agile mean? Agile is basically consistency, adaptability, and simplicity. I want to show you guys how trading can be super easy, how trading is being complicated out there, and I want to show you guys that you can actually become consistent within 3 months. Within 3 months, you can become consistent and profitable. And that's why I'm bringing you guys a series. And I'm very excited to be giving you guys all the insights that I've gained over the years, over a period of 10 videos. And it's going to be very exciting. So this is just episode 1. This is just an introduction to the mentorship series. So it's going to be lifestyle mixed with learning. And I'm very, very excited. I'm looking forward to this. So right now, I'm now by the gym. And it's you know, it's a very, very unique opportunity that I'm giving you guys. It's something that I wish I had in my earlier phases of learning. I want to be teaching you guys, and I want to be showing you guys why 90% of the traders fail. And I'm actually here to show you guys that 90% of traders fail because they lack that consistency, because they lack that right knowledge. And I'm here to give you guys that right knowledge. So I can't wait to actually be with you guys in this series, and I can't wait to give you guys all the knowledge that I have trading. This is going to be a very, very fun experience, and I hope that you guys enjoy this series. So after I leave the gym, I'll just go have a small talk with you guys at home, and we'll continue with our series. I can't wait to be giving you guys all the knowledge, all the information, and I hope that you guys get the most from this. So this mentorship isn't just about me teaching you, it's about showing you the lifestyle that I have as a trader, and also motivating you guys, and also teaching you guys how to live the same. Handling $100 bills like this shouldn't be something that takes you months or years to do. You know, it's something that you can do on a daily basis. And right now, I just came from the gym. This means that I'm locking in now. I have a mini gym at the house. You guys have always seen it. But me actually taking the extra step and committing to go to pay also shows how much commitment you guys have to put in whatever you're doing. I have a gym here, but I don't use it because there's no commitment whatsoever. So you see me actually taking money from my pocket and going to pay because it's something that I'm putting my mind towards to. So I always tell you guys the same thing. With everything you do, you always need to go the extra step to actually commit yourself to something. So if you're in this mentorship just for fun, then this is not the right place for you. This is actually where I'm going to take you to invest in the markets. I'm actually going to make you a very profitable business, and this is something that I'm looking forward to actually teaching you guys. So this is just episode 1. Welcome to the Agile series. So I'm going to be posting episodes on a weekly basis. So in total we have 10 episodes, and this is just episode 1. So in today's episode there's no chat week. I'm just preparing you guys for what's coming your way. I can't wait to be teaching you guys. Before we talk about the charts, let's get one thing straight. Trading is simply buying and selling. You're not trying to predict the future, you are reacting to opportunity. Let's say you buy the US dollar and sell the euro. If the dollar gets stronger, you make money. If it gets weaker, you lose money. That's all we are really doing in trading. Trying to buy when it's cheap and sell when it's expensive. So a simple analogy to tell you what I'm saying is, for example, let's say apples are going for $10 in December. They're going for $10 in December. And they're going for $20 in February. So in trading, what we basically try to do is to buy low when they're discounted. When they're going for $10, we buy, and when they're now going for $20, we sell. So we've made money in this small price difference that has happened when the market went from $10 to $20. That's what trading basically is, but on currencies. So let's say, so it's buying and selling. So I know most of you are probably already asking, when do we need to sell? So let's say the apples are going for $20 in December, and you know they'll be $10 in January. You sell them for $20 in December and buy them at $10. So you have made a profit by just selling them at the right time and buying them again at a discounted price. So if you sold them for $20, you can now buy 2 apples later, but you only sold 1 apple this time around. So that's what trading basically is. I hope by now you kind of have a rough idea of what trading actually is and what trading is about, right? So moving on from that, I want to show you guys how the markets move. So it's either the markets are going down, and when the markets are going down, we are making lower lows. So we go high, we go lower, we go low, higher, we go lower, higher, lower, higher, lower. Or the markets are going higher, so we go lower, then higher, lower, higher, lower, higher, lower, higher. Or the markets are consolidating and they are moving in the same area. these are the only three ways the markets move. There's nothing other than this. So this is called a bearish movement. This is a bearish movement, and this is called a bullish movement. And this is the only three ways that the markets move. You will never see anything other than this. So this is the only three ways the markets move. So this is just an introduction. I want you guys to get familiar with what trading actually is. And now we will move on to the next thing, which is our candlesticks. So we have what we call candlesticks. So I'll just try have a visual illustration of what a candlestick actually looks like. So a candlestick looks like something like this. Then it has a wick on one side and a wick on the other side. So this is what a candlestick looks like. So what is a candlestick? So when the markets move, remember what I just taught you just now, how the markets move. Remember, I just taught you how the markets move, how the markets go up, down, up, down, up, down. This movement, I'm representing the line here, but on the charts, we can see this movement as candles. This up and down movement could be 100 candles representing this up and down movement. So we have what we call a line chart, but as I trade, I utilize the candlestick chart. So now let's try break down what this is. So this is the body of the candlestick. So just that's the body, and this right here, this is what we call the wick of the candlestick. So how do we get to understand candlesticks now? So in my charts, as you guys are going to be seeing as we go forward, when the candlestick goes up, it's going to be blue. When the candlestick goes down, it's going to be black. So I want to also have a visual illustration of a down movement candle. For you guys. So this candlestick is going to be black inside. This candlestick is going to be black inside. So this is a down candle, right? So what's the difference between an up close candle and a down close candle? This candle basically is this candle is showing us that we opened here and we closed here, but we traded into this week. So this week basically represents a place we traded to, but we didn't close there. So if you can see the same thing here, we traded to this zone, but our opening price was here, our closing price was here. So what the end of the body means, this is the closing price. Close, if it's an up close candle, this is the closing price, and this is the opening price of the candlestick. This is the opening price of the candlestick. So the difference between these two candles is that this was the opening price and this was the closing price. So now by just looking at this candle or this one over here, you can already tell that the candle opened over here. It traded lower before actually closing. So it traded lower to this zone. It also, when it opened, it also traded higher to this zone. Then it came back to its opening price. Then our body formed and we traded lower to this zone before we eventually came back to close over here. So you can read a candlestick after it is even closed. You can read what went on in the movement. So all this price movement over here, it consists of up and down close candles all the way to this zone, because every time we have a retracement, that's also a down close candle. And even in that upwards movement, there could also be a down close candle in that zone. So I hope that candlesticks, you guys understand what candlesticks are by now. In our charts, blue means moved up and black means moved down. right? So when a candle is an up close candle, it means buyers were in control. When it's a down close candle, it means sellers were in control. So that's it for our first episode. I hope that you guys actually enjoyed this lesson, and I can't wait to actually give you guys a second lesson. So this was just an introduction to what trading is, to what candlesticks are. Welcome to the Agile series. I want to make sure that you guys are the most consistent that you can be, and I can't wait to see you in the next one.